So let's talk about the BRRRR strategy, or BRRRR. That stands for buy, rehab, rent, refinance, and repeat. Now, this is a very popular strategy that a lot of people want to execute, but very few people actually do. All right, let me walk you through the process here. So you as an investor go out there and you buy a property for under market value. So think about similar how you would buy a flip. So you want to buy it for cheaper than what the market price is. You go in there and you rehab the properties. Now, a lot of times when you go in there and take a distressed and ugly property and you rehab it, you will increase the property value for more than what you put into the property. So if you buy a property for $100,000 and then you put $20,000 in a rehab and that's worth $140,000, you've created some equity in there. And then this next R is you rent it out. And then once the tenant's in there, once it's refinanced and typically has to season or stabilize for about 6 months or so, then you can refinance or pull your money out. Now, going back to the example, if I buy for $100,000 and I put $20,000 into the rehab and then I refinance it and it's worth $140,000, I can actually pull out some of my initial capital, and that allows me to take that capital and then repeat it onto a next property. So it's a very powerful way to go out there and buy properties and actually get them into great shape by rehabbing them and then pulling your capital to go out there and reuse it. Now, the difficulty is it's hard for a lot of investors to go out there and find the properties and operate it, and you also have to have certain market conditions. So I will go through the spectrum here and talk more about it. So deal availability. Again, this is very dependent on your local market and also the inventory levels of what's going on in your local market. So after the 2008 meltdown, finding properties that fit the BRRRR deal availability was high. You could go out there and do it, relatively easily, I should say. Well, as the buyers came back to the market, inventory went really low, and it shifted from a buyer's market to a seller's market, which a lot of markets have been in the last 6 to 10 years. It's become increasingly difficult to go out there and find a property that you can buy for undervalue. And the other thing too is not just buy a property that you can get it, for a cheaper price and add rehab. It also has to make sense as a future rental property, because a property that you can flip doesn't mean it's a good BRRRR property, because who's the end user for a flip property? It's an owner-occupant. It's someone who wants to buy a beautiful property. With a BRRRR property, the end user is a tenant living there and then an investor owning the property. And a great flipped property and a great BRRRR property on the surface look very similar, but they're actually two very, very different types of underwriting models, and often two very, very different types of properties you can go in there and actually execute on. So when the inventory is low or in a buyer's market, it's generally incredibly hard to go out there and do a BRRRR strategy. Now, for my brokerage here in Colorado, we do a handful of BRRRR properties a year, and I'd say it's about 1% of our transactions. It's not because we don't want them. It's not because our clients don't want them. It's just because it's really hard to find those deals. And secondly, it takes a lot of times a lot of time to go out there to source the deals and rehab the deals and run it. Again, it's a very powerful strategy, but realize you are starting a business and you have to put a lot of time into it to source the properties and then run the rehabs. And I wouldn't expect, a lot of agents out there to be like your go-to person. Oh, I can help you out with every step along the way for a BRRRR property. Again, if you find an agent that can, the market conditions, great. But generally speaking, it is going to be your job as an investor to go out there and source a lot of these deals and then figure it out on your own. And this also goes along with the skill, because it does take a higher level of skill to source the properties and then rehab the properties and then make sure you have the financing lined up to pull the money back out. Risk, I would say these are some of the riskier properties, because a lot of people will start the process. Actually, a lot of people will start looking for BRRRR properties and they'll spend a year or two looking for it and they never execute on anything. So from one standpoint, it's riskier if you actually never go out there and buy a property. I'd rather go out there and buy a really good deal than buy no properties looking for the unicorn perfect deal. I'm very much a good enough person, and I've seen many investors build millions of dollars worth of net worth by finding good enough properties, but not the unicorn properties. Secondly, I've seen also people go into the process and then they have trouble with the refinance, or they run into rehab problems, the numbers don't line up, and then they have a hard time going from a hard money loan or pulling their cash out to traditional financing, and they have to bring more money to the table or their capital gets locked in there. For networking, I would say this is a higher end of the networking spectrum you need for BRRRRing, because for finding these deals, you're going to have multiple people out there, sending you deals, looking for deals, helping you run the deals. Again, it takes a higher network to do these. Capital. You definitely need some capital for these properties because you have to invest some capital, and even if you're using a hard money lender, they still usually want to see some skin in the game. Now, you're not going to need a 25% down payment typically like you would on a traditional rental, but you'll need some capital to go out there and execute on here. And of course, you want healthy cash reserves for when you run into problems or a rehab budget goes over estimate or have a hard time on the refinance. For financing on here, generally there's two financing components on here. One is like a hard money loan, which is a short-term, higher interest rate loan, usually like a year or less to go out there and buy the property. And then once you're done the buy, rehab, and rent, you move on to the refinance. That's where a lot of times you work with a traditional lender. They'll put on a 30-year mortgage on there to give you that great long-term financing and a much lower interest rate than the hard money would. So there's lots of great hard money lenders, lots of great lenders out there as well. So make sure you talk with your lender and your agent for recommendations and see what your lender can do. Now, one thing I've noticed is you want to make sure both your lenders, and I'm doing assumptions here, your hard money lender and your conventional lender, you want to make sure they're on the same page and they're talking to each other before you go out there and buy a property. I have heard many horror stories of investors. They get a hard money loan, they buy a property, they rehab it, they get a tenant in there. Then they go out there and start talking to lenders for that refinance component. And then somewhere along the way, based on the property or that person's credit score, that person is not able to refinance it. Well, that creates a huge issue there and also ups the risk on this type of investment. So if you pursue this, make sure you have a great lending team and make sure all your team members are looped in and are communicating together, because this really is a team effort to get a BRRRR property to the finish line. Now, I emphasize this as a hybrid between business and investing, because the goal here is to get a long-term rental property in great shape with little or no capital in there for you. However, it takes a lot of effort to source the deals and run the projects, and that is more of like a business where you have to go out there and spend time and usually spend money to go out there and find these deals. So I'm not going to go into property law to underwrite a BRRRR property. And I say that because for the vast majority of people who are doing long-term real estate investing, BRRRR properties are not like the mainstay of the way they go out there and invest. And that's just because of the market conditions. Like the last number of years here in the Denver metro area, it's really tough to BRRRR. Some people are doing it, but they are the very experienced real estate investors with often a full team of acquisitions and agents and crews, and they have a really robust real estate business. And in the current market condition, and I'm generally speaking here for a very low inventory environment, which a lot of markets are in right now, it's a really hard strategy to execute. And more often than not, I see a lot of people want to go into here and they spend a year or two spinning their tires, making no traction. While other people, they're not doing the BRRRR strategy, but they buy a traditional rental or they do a house hack and they go out there and they buy one or two properties. While those properties are not nearly as sexy as a BRRRR property, a couple of good rental properties will always make you wealthier than the unicorn perfect property that you don't buy. So lots of stuff to dig into here. And again, this is where you want to really lean into your agent and your lending team to see what's going on in the market and what is realistic in the current market conditions for your market, and also get a really good understanding about how much time and effort it's going to take from you to go out there and execute on the BRRRR process.